If you're watching this, you're probably asking yourself one of three things. Can I actually afford to buy? Where do I even start? Or am I making an expensive mistake? There are lots of first-time buyers that don't move forward because the process feels unclear. Deposits, mortgages, credit checks, surveys, it all sounds complicated. But in reality, it's structured, and when you understand it properly, it's far less intimidating than people expect. In this video, I'm going to walk you through exactly how the process works, how lenders decide what you can afford, where most people go wrong, and how you can move forward with confidence. Let's start at the beginning. Before you look at numbers, start with you. What are you actually looking for? How many bedrooms do you need? Is parking essential? Do you commute? Is outdoor space non-negotiable? I know this sounds really basic, but the worst thing you can do is get attached to a home and then come unstuck when you realise it doesn't provide what you need. I like to have two lists: what I need and what would be nice to have. These lists will help you later when you get swept up in the emotion and you need a clear head. Of course, you can view a home anytime you like, but here's the smart way to view a home. Where most people get it wrong is they start viewing homes before they understand what they can comfortably afford. Affordability is not just about your deposit. Lenders will look at your income, your fixed monthly outgoings, any loans or credit commitments, your credit history, and how resilient your finances are if interest rates shift. Two people earning the same salary can be offered very different mortgage amounts. Why? Because affordability is income minus commitments, not income alone. If two buyers both earn £40,000 a year, but one has an expensive car finance and some weighty credit card balances, their borrowing capacity could differ significantly. This is why an early conversation with an independent mortgage advisor is a great idea. They'll help you understand what you can borrow, what you feel comfortable with, and whether anything needs adjusting before applying. And this is important. Just because you can borrow it doesn't mean you should. Your future self will thank you for it. Once you've been through it with your advisor and you feel comfortable, you can apply for something called a mortgage in principle. A mortgage is simply a long-term loan secured against a property. A mortgage in principle is an early indication from a lender that says that based on what we can see, we can likely lend up to this amount. It's not binding, it's not final, and it doesn't lock you into a lender. And this can stop you from falling in love with something that is financially unrealistic. You stop guessing and start operating within a defined range. The biggest mistake first-time buyers make is not choosing the wrong home. It's overstretching. Just because a lender offers a number, it doesn't mean it's comfortable for you long term. You need margin, you want flexibility, you want space for your life to change, because it will. This is where you should ask, is there any support available to me? There are first-time buyer incentives and developer-supported options that can reduce the deposit required, improve affordability, or make buying accessible to you sooner than you expected. The key is guidance, not assumptions. So once you've found something that fits your budget and ticks all your boxes, you're one step closer to owning your new home. Reservations are where the process becomes real and exciting. This is the point where the structure increases. But because you've already understood affordability, secured a mortgage in principle, and sense checked it with your own comfortability, you can be confident that you are making the right choice for you. Once your offer is accepted, two important things begin to move forward: your legal checks and your full mortgage application. Let's start with the legal side. Now you need to instruct a solicitor, and their job is simple: to protect you. They will review contracts, liaise with the seller's solicitor, handle legal documentation, and conduct property searches. Searches will examine local authority records, planning permissions, environmental concerns, and any long-term risks tied to the property. This part often sounds the most intimidating, but it exists for one reason: to reduce risk before you commit. While your solicitor is working on those checks in the background, you move on to the next key stage: turning your mortgage in principle into a full mortgage application. Now your mortgage in principle can become a full application. You'll need to provide a variety of personal documents, and the lender will perform a deeper affordability assessment. This includes stress testing your finances against potential interest rate increases. This is not to trip you up. It's to ensure that the mortgage remains manageable even if circumstances shift. As part of the process, the lender will also confirm that the property itself supports the loan, which brings us to valuation and survey. A valuation is for the lender. It confirms the property is worth the agreed price. A survey is for you. It assesses the condition of the property. With new build homes, warranties provide additional reassurance, but inspections still serve a purpose. They are safeguards that are built into the system. Once your financial checks and your property checks are complete, your lender can make a formal decision. Your lender will then confirm your formal mortgage offer in writing. This will confirm your interest rates, mortgage terms, and monthly repayments. At this stage, things become concrete. But if you've listened to what I said earlier, there should be no nasty surprises. And with the mortgage offer in place and the legal work progressing, you're almost at the point where you can get your keys. The finish line is in sight. Exchange is when the purchase becomes legally binding. It's important to remember that before exchange, things can still change. And after exchange, although the commitment can feel real, it shouldn't feel uncertain. Your finances are clear, the property has been checked, legal risks have been reviewed. Keep your cameras at the ready, because guess what? It's completion day. Completion is when funds are transferred. You receive your keys and you finally become a homeowner. Congratulations! If you're serious about buying in the next 6 to 18 months, your next step is not viewing homes. What separates confident buyers from hesitant ones is clarity. If you can understand your real affordability, your financial comfort zones, the safeguards built into the system, and the support available to you, making the dream happen becomes so much easier. Good luck! In the next video, we'll break down how much deposit you really need to buy a new home, because it might be easier than you think.